Hello! Inflation, geopolitical tension, and crypto tax in India. Here's what actually happened in crypto this February. But before we dive into all the news, here's our standard disclaimer. Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions. So, first up, the impact of the tussle between Russia and Ukraine was not restricted to the stock market. The prices of cryptos went for a nosedive, with all the overall crypto market losing $200 billion overnight when Russia announced plans of a military operation against Ukraine. Bitcoin fell nearly 10% amidst all the commotion, serving as further proof of the OG crypto losing its sheen as digital gold. Meanwhile, the price of actual gold was seen climbing to a new high as people looked for a safe space to park their assets. The price of cryptos were already in the red this year with an unexpected interest rate hike by the US Federal Reserve, which would sweep away any extra liquidity. The budget stole the headlines this year, but not because it eased up things for the middle class, but because of cryptos. Finance Minister Nirmala Sitharaman announced a 30% tax and a 1% TDS on all virtual digital asset transactions. This includes everything from cryptos to non-fungible tokens. And it has even left room for the Indian government to introduce new use cases as and when they emerge. Experts believe that more clarifications are probably in the works. The tax's intermediate impact will be seen with day traders lowering their frequency, some finding ways around the law by trading in derivatives, or simply leaving the crypto market and heading back into equities. Crypto companies have warned about the heavy impact such a tax could have on the crypto adoption and proliferation in India. It could even lead to developers migrating to more crypto-friendly countries. However, they did welcome the move to a great extent, since it gives some kind of official recognition to cryptos, albeit in a roundabout way, by calling them VDAs, virtual digital assets. But Sitharaman has firmly stated that the tax does not make cryptos legal. Which brings us to a full circle to India's crypto bill, which has been a work in progress for over a year now and is yet to make it into the public domain. The world's largest NFT marketplace, OpenSea, isn't having the best year, well, at least when it comes to being secure. After last month's bug wiped millions from users, this month a phishing attack led to NFTs worth $200 million getting stolen. The platform was ardent about the fact that the exploit was not due to a fault in its platform, but because users chose to click on malicious links. And there was one other company hit worse than OpenSea, a token migration network called Wormhole. It's basically a platform where you can transfer assets from one blockchain to another. And it was the target of the biggest DeFi attack of 2022 so far. More than $321 million were wiped from its system when an anonymous user was able to take advantage of a verification problem in its program. The Wormhole team even offered a $10 million bounty for anyone who could track down the perpetrator, but with no luck. And that's it for this month. If you like this video and you want to get an update on when the next round comes out, please do subscribe to the Business Insider India channel. As always, do remember, crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.